Everything just changed for crypto. While you were watching the charts, Donald Trump signed executive orders that could open up 401k retirement funds to crypto, potentially unlocking a $12 trillion floodgate. At the same time, the SEC's case against Ripple is officially over, clearing the path for an XRP ETF. Wall Street is noticing, with firms like Fundamental Global raising billions just to buy and stake Ethereum. It's why experts like Tom Lee see ETH hitting $16,000 in its own Bitcoin 2017 moment. This isn't just hype anymore. The big money is making its move. Are you positioned for what comes next? In the latest video from Altcoin Daily, the channel features expert Tom Lee, who has changed his mind and is now incredibly positive about Ethereum. He predicts ETH could reach $16,000, framing this as Ethereum's Bitcoin 2017 moment. Lee believes several factors are at play: the greenlighting of stablecoins, which need smart contract platforms like Ethereum, and Wall Street's move to put the financial system on the blockchain. He notes that major players like JP Morgan and Robinhood are choosing Ethereum because of its 100% uptime and legal compliance. Lee also mentions Bitmine, a company aiming to be the MicroStrategy of Ethereum, which is building a large treasury of ETH and staking it to generate over $100 million in net income. He bases his $16,000 price target on research from Sean Farrell, who suggests the ETH to Bitcoin ratio could return to its 2021 highs. It's interesting to hear two different experts arrive at similar conclusions through different lenses. Tom Lee's case for Ethereum feels particularly strong right now, especially with the recent news about spot Ether ETFs getting the go-ahead in the US. His argument about Wall Street preferring Ethereum isn't just a theory anymore. It's happening in real time. This regulatory clarity gives a lot of weight to his $16,000 prediction. Feffi's take on this being a trader's market also rings true. The market has felt very choppy, and many altcoins have struggled while Bitcoin has held strong, which supports his idea of Bitcoin decoupling. His three picks, Ethereum, Solana, and TON, cover the main narratives perfectly: institutional adoption, ETH, retail innovation and speed, SOL, and a massive untapped user base, TON. It's a solid, diversified take on where the real growth could come from beyond Bitcoin. In the latest video from the Crypto Rover channel, the host is celebrating a major pump in Ethereum while Bitcoin's price stays flat. He says this is a move he predicted, and he's currently sitting on over $300,000 in profit from his Ethereum trade. He points to the Ethereum versus Bitcoin chart, showing that it has broken through a significant resistance level. His target for this move is about 9% higher from where the price is now. Once it hits that level, he plans to sell and close his position. He believes this could push his total profit on this single trade to around $600,000. To support his theory for an even bigger move, he shows a chart that compares Ethereum's current price action to a past pattern from Tesla, suggesting that if ETH breaks its next high, it could really take off. It's interesting to see this analysis focus purely on the technical chart patterns. While the ETH-Bitcoin ratio breaking resistance is certainly a notable event for traders, the bigger picture right now is all about the surprise approval of spot Ethereum ETFs in the US. This is a massive fundamental development that has shifted sentiment across the market. Many analysts believe this approval is the primary driver behind Ethereum's recent strength against Bitcoin, as it opens the door for significant institutional investment. The technical breakout Crypto Rover is talking about is likely a direct result of this huge news. The real question is whether the momentum can continue once the ETFs actually start trading. In the latest video from Lark Davis, he kicks things off with what he calls bonkers news from President Trump. Trump signed two executive orders that are a big deal for crypto. The first prevents banks from denying services based on political beliefs, aiming to stop things like Operation Choke 2.0, which targeted the industry. The second, and much bigger story, is a move to allow 90 million Americans to access alternative assets, including crypto, through their 401k retirement accounts. This could potentially open the door for $12 trillion in new money to flow into the market. Next, he covers the huge news that the SEC versus Ripple case is officially over, declaring it a win for Ripple and the broader crypto space. This resolution now frees up XRP to move without the legal pressure that held it back last cycle, And it sparks talk from people like Nate Geraci of the ETF Institute that BlackRock might now file for an XRP ETF. On the Ethereum front, Wall Street is apparently going gaga bananas for ETH. A company called Fundamental Global Inc. is raising $5 billion just to buy and stake Ethereum, joining other companies like SharpLink Gaming in making massive ETH acquisitions. This buying pressure is building as ETH continues to battle the $4,000 resistance level. Technically, Bitcoin, ETH, and Solana are all showing potentially bullish signs, with MACD crossovers looking likely and key moving averages being tested as support. It's interesting to see the political winds shift so dramatically for crypto in the United States. The excitement around Trump's executive orders is understandable, as it signals a complete reversal from the previous administration's hostile stance. However, it's worth noting that the path for 401k funds to flow directly into crypto is likely more complex than just a signature on a document. These things often involve long regulatory processes. What's undeniable, though, is the change in sentiment. Having a presidential candidate actively court the crypto industry turns it from a niche issue into a major political one. On the Ripple front, the end of the SEC case is a monumental win. That lawsuit was a dark cloud over not just XRP, but the entire altcoin market for years. With that uncertainty removed, the discussion can finally shift from legal battles to utility and adoption, which makes the idea of an XRP ETF feel much more like a win than an if. In the latest video from the Coin Bureau channel, Guy breaks down what Bitcoin dominance, Bitcoin.D, really is and how you can use it to get a feel for the market. Think of it as a thermometer for money flow, showing the percentage of the market's value held in Bitcoin compared to the top 125 altcoins. He points out that it's not a perfect metric, as things like stablecoin growth and new token launches can throw off the numbers. Historically, major alt seasons kicked off when Bitcoin.D took a nosedive. In 2017, it plunged from the mid-90s to the mid-30s, and in 2021, it dropped from 62% to 40%. The video does a fantastic job of explaining a classic crypto indicator, and its timing is spot on. The framework of watching Bitcoin.D break down as ETH gains institutional traction is exactly what many are looking at right now. My view is that while the theory is sound, the market's reaction feels a bit more hesitant this time around. The massive inflows into Ethereum ETFs are undeniable, but we haven't seen the explosive, broad-based altcoin rally that many expected to immediately follow. Instead, it feels more like the barbell market Guy mentioned, where ETH gets the institutional love and speculative meme coins get the retail attention, while many solid mid-cap projects are still waiting for their turn. It seems the market is in a state of anticipation, and Bitcoin's dominance is reflecting that by chopping sideways rather than falling off a cliff. The ingredients for an alt season are there, but the oven hasn't been fully turned on yet. In the latest video from Crypto Banter, the host sits down with Luca Netz, the founder behind Pudgy Penguins, the Pengu meme coin, and the new abstract L2 chain. The conversation kicks off with two interesting charts. Ethereum, which looks like it's finally breaking out of a 4-year range with potential next stops at $4,400 and $5,000, and the Pengu chart, which is forming a perfect cup and handle pattern. It's hard not to be impressed by Luca Netz's ambition. He's not just building a meme coin. He's building a vertically integrated entertainment and tech company on the blockchain. The idea of turning a meme coin, Pengu, into a social currency for a tangible brand like Pudgy Penguins is a smart play. While most meme coins run on hype alone, Pengu is tied to a business with real-world revenue from toy sales and stores like Walmart and a growing IP licensing model. This gives it a foundation that coins like Doge or Shiba never had. In the latest video from Crypto Wendy, she talks about the recent buzz around Ripple and why Bitcoin supporters seem so worked up about it. She believes you can be a fan of both, pointing out that Bitcoin's strength is its complete decentralization with no CEO, while Ripple's corporate structure allows for big partnerships. She touches on the decentralization of the XRP ledger, mentioning that Ripple's CTO, David Schwartz, confirmed the company can't control it. According to an article she references, Ripple runs only about 1% of the network's validators, and any changes require an 80% approval rate from them. While she wishes Ripple's validator control was even smaller, she sees the overall setup as a positive. The biggest news she covers is Ripple's plan to buy the stablecoin platform Rail for $200 million, a deal expected to close in Q4. She explains that Rail handles 10% of global stablecoin payments, and this acquisition will help Ripple offer a more complete payment solution. Wendy thinks we're in a stablecoin season, where every major crypto project will launch its own stablecoin to compete. She feels that once the stablecoin market settles and spot ETFs get approved, we're going to see some really nice price movements for altcoins. It's interesting to see the focus on Ripple's strategy to become a major player in the stablecoin market. The company is clearly trying to build bridges with the traditional financial world, not tear them down. This move to acquire payment and custody infrastructure alongside their recently announced plan to launch their own US dollar-backed stablecoin shows they're serious. They aren't just talking. They're actively positioning themselves to compete with giants like Tether and Circle, especially in the cross-border and institutional payment space. This feels like a very calculated effort to be the regulated, bank-friendly option in the crypto world. In the latest video from the Modern Investor, he covers a few big moves happening in the crypto world. First up, a Malta-based company called Samara Asset Group has just announced it holds $57 million in Bitcoin, which makes up almost 28% of the company's total money. This follows the trend of companies shifting away from traditional finance into digital assets. Next, the crypto exchange Bullish is looking to go public in the U.S. It has filed for an IPO on the New York Stock Exchange with the ticker symbol BLSH. This is interesting because a lot of crypto companies are suddenly deciding to go public at the same time. Bullish reported a rough first quarter with a net loss of $349 million, but it claims to have $1.9 billion in liquid assets. Finally, Ethereum developers are planning their next big hard fork called Fusaka for this November. The update is all about making the network faster and more scalable, likely in response to all the institutional money coming in that demands higher transaction speeds. It's my view that these three stories aren't just random news items. They're puzzle pieces showing a bigger picture of the industry's evolution. Samara Asset Group's Bitcoin purchase shows that it's not just the huge, well-known corporations adding crypto to their balance sheets. Smaller international firms are also seeing it as a serious strategic move. The Bullish IPO attempt, especially with their reported Q1 loss, is a bold move that will really test Wall Street's appetite for crypto companies that aren't named Coinbase. The most telling piece is the Ethereum Fusaka upgrade. The accelerated timeline for these upgrades feels like a direct response to pressure. As big money and banks start building on Ethereum, they can't operate on a slow network. The developers are clearly in a race to build the infrastructure needed to support this next wave of adoption.